Hello and welcome to this MBL webinar on offshore funds, what they are and how they are taxed. My name is Edward Hayes and I'm a tax and trust lawyer at Burgess Salmon LLP. And this webinar will cover broadly four key topics. So number one, what is an offshore fund and what are offshore income gains? Number two, which offshore funds produce offshore income gains? As we'll see when we get onto it, offshore income gains are really at the heart of why we care about offshore funds in the first place. Number three, the taxation of offshore funds. And number four, the foreign element, so how these interact with the remittance basis rules and offshore funds held by trusts, in particular non-UK resident trusts, and the anti-avoidance rules associated with those. The first step we have to ask ourselves, well, is it a mutual fund? You can't have an offshore fund unless you've got a mutual fund to start with. So is it one of those? And we apply our checklist of the conditions we've just looked at. So condition A, we satisfy that because our fund is designed to pool investors' money and invest that money. Condition B, the participants do not have day-to-day control. There will be a very clear divide in a Luxembourg SICAV between the management team running the show and the investors putting their money into it. Condition C, yes, the investors will expect to realize their investment by reference to the net asset value of the fund. And so those three being satisfied means we are, as a starting point, within scope of the definition of mutual fund. Then the question is, does condition D combine with either condition E or condition F take us back out again? So I mentioned earlier that if you're looking at a reporting fund or or trying to work out whether a fund is reporting, you can go on HMRC's website and you can look at the list that they maintain. It's an Excel spreadsheet of all the funds with reporting status. Now, generally speaking, in order to actually benefit fully from the reporting status, a fund will have needed to have that particular categorization throughout the entire period of the investor's ownership. So if you acquire a fund and then it becomes a reporting fund after you've made your investment, the default position is you're not going to benefit from the reporting status. And we'll come on to exactly what those benefits are, but you need to be looking at the entire period of the investor's ownership.